It's good to see a good turnout here tonight. And just a quick disclaimer, it's not solicitation for funds, tax advice, or legal advice. We're going to talk about how Seth Martinez, my business partner, and I run People's Capital Group in the markets that we focus on investing in, why we focus on those markets, and how we help people invest in high demand markets with People's Capital Group so that it's a passive experience so they get the benefits of owning real estate without the headaches of being a landlord. All right, so tonight's agenda, we're going to go a quick disclaimer, a summary of People's Capital Group as well, what we do here, our preferred local markets. I'll talk about specific markets in North Jersey that we like investing in and why. And we'll talk about meet the founders of People's Capital Group, Seth Martinez and I, how we kind of got started together and started helping people invest in real estate, our historical performance. And of course, the benefits to investors. We'll talk about how we create a deal. Okay, the best deals are not necessarily found, they're created. We'll break into exactly what that means and how there's not really a silver bullet to find a great deal. I'm sorry if you're looking for that. There's not one hotshot website or one person you can call or one broker that's going to make it happen. There's a process of creating a deal. And we're going to talk about how we create deals and how we there in turn create really good opportunities and discounted investment opportunities for our investor group. We'll talk about our value add strategy because really it's all about your value add strategy when it comes to these properties. And I'll explain how important it is to find value add or be able to find value add in these properties and how that's really how you create a good deal is you find a value add opportunity. We'll talk about the responsibilities of People's Capital Group and the process to proceed if you feel like this is a fit for your investment goals. And we'll talk about the next steps to get qualified and if that's something that might work for you. But once again, this is not tax advice, it's not legal advice, not a solicitation for funds. We're just going to talk about how People's Capital Group helps people passively invest in real estate. Where do we invest? Why do we invest there? And what our experience has been with passive investors buying mismanaged apartment buildings in North Jersey, repositioning them, and then refinancing over time, and why we chose that business model. I see more people are jumping on here as we go. I move pretty quick, so if you have any questions, please type them in the Q&A. We were having a little internet issue earlier today, but I think everything should be fine. If my internet slows down or for some reason pops off, I'm just going to restart the presentation. So if for whatever reason I'm kicked off, which I hope is not the case, I'll restart right up and you can jump on right away again. Keep in mind as we have questions, I encourage questions. I love questions. I see more people are jumping on here. So type those in the Q&A and any technical difficulties as well. Let me know in the Q&A there. And we'll make sure we have a good presentation here. I'm going to answer all questions at the end of the presentation. We'll have about a 30 to 45 minute presentation here tonight. And this is about where to find the most profitable real estate investments. So here's a strategy of our summary and why we have this strategy. Here's a summary of our strategy, why we have this strategy. So real estate investments are a historically excellent hedge against bull and bear markets. They tend to be a little less volatile than the stock market and other asset classes and a little more tried and true as well. And real estate has generated more financial value for more people than any other investment category in history. In fact, I was reading today that most millionaires and billionaires have somewhere around 60 to 70% of their wealth in real estate, which is really incredible. You would think it'd be the stock market, but it's actually the other way around. I think most hardworking individuals have their money in the stock market, and it's almost like, you know, if you're really super wealthy, well, why do they all have most of their wealth in real estate? Maybe there's something to that. And I've also built my wealth in real estate, and I found it to be a very tried and true strategy and allowed me to create financial freedom for my family as well. But the benefits of owning real estate include cash flow, equity depreciation, and appreciation, and tax advantages, tax depreciation. So we buy apartment buildings that we rent out for top dollars, we renovate them, and that produces positive cash flow over time for our passive investors. And we buy in high demand markets in North Jersey within an hour of Manhattan. We'll break into those markets in the next few slides. And that allows for equity appreciation. We also buy mismanaged apartment buildings for good prices. So you make your money when you buy, you got to buy at a good price, improve it, and that's going to boost your equity appreciation. That's called forced equity. And of course, you have tax depreciation as well. So our investors enjoy a K-1 tax form at the end of the year. Okay, so we have also People's Capital Group here. We founded our company in 2013. And as I was saying, we help people invest in real estate. We help primarily busy professionals, people that don't have the experience or the time to look at hundreds of bad deals to find a good one, or deal with a management company or the shenanigans of being a landlord. So we make it very easy to get invested in off-market deals that average investors wouldn't have the opportunity to find because they're not sitting on the internet. So you have to know someone to find a good deal. We'll talk about that a little more. And we work with select clients. We cannot work with everyone. We do have a qualification process that starts at peoplescapitalgroup.com with scheduling a qualification call. So there is a qualification process. We cannot work with everyone. You have to be a sophisticated or accredited investor, and I'll explain those in more depth. We also pride ourselves in helping others by sharing our experiences and our expertise. Seth and I have done over 250 transactions together. We've fixed and flipped properties, we've wholesale properties, we've bought and sold apartment buildings. We've been working with other people's capital in real estate for 10 years each now. We've been incorporated in 2013, so we've had a breadth of experience. We have over 50 investors that can reinvest over time, and together we have over 25 years of real estate experience with our management company. And we offer a completely passive structure here where we manage the property from A to Z. We'll analyze hundreds of properties to bring the best opportunity well vetted to our investor group. And of course, that's a long-term passive investment with multiple exit options along the way for our investors. And our mission is to make real estate more attainable for more people. See, for years, only accredited investors could invest in real estate. Now, an accredited investor is someone that has a net worth of $1 million, not including their primary residence, or has an income of $250,000 a year individually, or $300,000 with their spouse, and the expectation to make more or the same next year. So essentially, an accredited investor is someone who has $1 million in net worth, not including the primary residence, right? Or is a millionaire or high earner. So for years, only accredited investors could work with real estate syndicates such as ours and get invested into real estate opportunities. But over the last few years, different acts have come into place. The Jobs Act allowed for us to create a type of fund that can work with sophisticated investors as well. And a sophisticated investor is someone that has investment amount of $30,000, has some investment experience, has additional savings and income so that they don't need to live on the returns of the investment, and understand the investment as well, and has a verifiable income as well. So, we work with sophisticated investors. Those are investors kind of getting started who aren't multimillionaires yet, and we work with them to help them become millionaires one day. And we also work with accredited investors who are millionaires, who have 7 figures with us. So we really pride ourselves on working with both large and small investors, accredited and sophisticated investors, and really helping people get invested in real estate, diversifying out of the stock market, and really helping build their nest egg, maybe their solo 401k or IRA, and diversifying that into real estate, which we'll touch on as well tonight. Okay. So let's talk about our preferred local markets here and where we like to buy mismanaged apartment buildings. So first of all, our strategy is purchasing mismanaged apartment buildings for 10 to 20% below market value in North Jersey, within an hour of Manhattan. That allows you to commute in Manhattan generally within an hour. So we really enjoy Paterson, New Jersey. That's one of the cities we've been investing in for years. We bought a number of properties there last year, which are doing quite well. It's really the only remaining city within a half an hour drive to Manhattan that you can buy a property at a decent cap rate. And so it's somewhat affordable compared to comparable cities, but you do have to pick and choose where you invest in Paterson, New Jersey, and make sure that you're investing in the right markets. Of course, Seth and I have been investing in the market for years, so we've made sure to pick and choose specific areas of Paterson we like investing in. We've done very well with our investor group there for a number of years. Newark, New Jersey, a Fortune 500 company stay there. There's a great place to be invested with the public transportation options, universities, proximity to New York City. Newark, New Jersey has been a gold mine for us. For years, we've made millions with our investors in Newark, New Jersey, and we continue to be very bullish on Newark. Now, there's areas in Newark that you may maybe not be as bullish on, but we have been buying in the downtown areas around the universities there. Also, other pockets in Newark that have really just skyrocketed and been great for us. So good jobs there, and a strong demographic, easy commutes into the city. Also, you have Newark Airport, which is one of the best international airports on the East Coast as well. So really just a lot of good infrastructure there to work off of, and decent real estate values. Although honestly, Newark's gotten so expensive now, it's starting to get up there almost around where Jersey City is. It's crazy. Jersey City, another hot market with huge growth, great location. We like Jersey City. Obviously, you've kind of missed the boat there. It's been growing for about 15, 20 years now, and the prices there have skyrocketed. So we haven't found many opportunities recently in Jersey City, but we're always looking. Rahway, New Jersey, great downtown art scene, many things to do, proximity to New York City. We're buying a 27 unit there right now, about 2 blocks to the train station. Nice opportunity there that's filling up very quickly. And so that property, that Rahway, New Jersey, really one of those up and coming areas that I think is going to really start to grow in value as that downtown area really has high demand, and companies like mine buy, renovate, and reposition apartment buildings near the downtown area, right? That all helps these cities come alive and improve the value in them as we renovate apartment buildings. That's another positive thing about renovating mismanaged apartment buildings, is that you improve the local community and you improve that building and the quality of life for people within that building. Okay, Morristown, New Jersey, strong property values. Neighboring towns offer great value as well. Easy commute into Manhattan also. So we really like Morristown. I personally enjoy living in that area. I think it's a great area to live in, fun to go out in, really a safe town, a safe city, easy to navigate, not too crowded or not too much traffic like you'll find in Jersey City, perhaps. Newark, Patterson, those are much larger cities. They're harder to navigate around. Plainfield, again, that's a bit of a smaller city that we really enjoy investing in. Direct line to New York City, strong rental market. I own a duplex in Plainfield. I think when I bought it, the rents were around $1,400. Now they're up around $2,400. So really just a huge growth there, huge demand in rental space there as well. A big rental market in Plainfield. So we like that. Berkeley Heights, New Jersey, that's where our office is located. Great suburban town, slightly more affordable than say Summit. So it's a little more affordable there, Berkeley Heights, but you have great schools, great suburban town. If you keep on going down the New Jersey Transit line there, you have Long Hill Township. That's a good town. New Providence, right? Those are all good towns right in there. We really enjoy investing in right along that 78 corridor. Great area there. And that'll bring you out to Bridgewater, New Jersey. Lots of white collar jobs in Bridgewater. Great schools, pandemic friendly. Bridgewater is one of those areas that a lot of people are moving out to, because if you only have to commute into the city now, maybe 1 or 2 days a week, well, Bridgewater, New Jersey is a great option. You got 78, you got 287, you could jump over to a train station. So, you could really commute easily around New Jersey, get into New York. It's going to be a little bit longer than if you lived in, Morristown or Jersey City or something like that. But of course, that families. New Brunswick, we got Rutgers University there. We enjoy New Brunswick. We don't have anything there right now, but we're always looking. West Jersey in general, right? We really enjoy West Jersey, Flemington, right? Clinton, Asbury, right? So out in those areas, you have those small little cities, but then you can also find good little apartment building opportunities there, or just single family flips or land. Sometimes we'll buy and flip land. We'll do that in Warren County. Warren County is one of the last remaining affordable areas to invest in North Jersey. So we buy lots of land in Warren County. We flip those out to builders. And that's something we'll do pretty regularly. Seth and I are always moving real estate. We buy apartment buildings primarily. That's about 80% of our activity, but we also still do some fix and flips. We're developing a ground up 2-family right now. So that's exciting. And we are always buying lots and flipping them out to that's a good place for us too. We do that. Who are Seth and I? So we got started together, as I was saying, about 10 years ago in real estate. Together, we've been able to build a portfolio of about almost $20 million in holdings, about 117 units or so. I see my internet maybe was a little unstable there, so hopefully you can still hear me. Hopefully my internet jumped back on. But so essentially, yeah, we have been investing here in New Jersey. We have a management company in New Jersey, out of Berkeley, out of our Berkeley Heights office, PCG Property Management. So we're laser focused on improving our own real estate, managing our real estate portfolio for our investor group, and returns, running the business day in and day out, the management side, working with contractors. And together we've done over 250 real estate transactions, over $40 million in real estate bought and sold. We've been very active in this one market, North Jersey. We really doubled down on it. We developed a good infrastructure with our in-house management company, and the performance shows. So historically, we've been able to hit our targets for our investors, or done about 10% greater than that. So we historically have achieved our targets, and we really focus on creating a nice experience for our investors where they enjoy monthly updates and quarterly financials. We work with a whole third-party bookkeeping and accounting firm that does all of our bookkeeping and accounting. So our investors get their financials in a timely manner, and they're organized and they make sense. And it's also a nice separation of power as well, working with a whole third-party bookkeeping company and accounting firm. And we have over 50 investors that reinvest with us over time. And we have a 3 to 5 year exit opportunity in our investments. As we buy, renovate, and refinance the building, the investors have the option to exit each refinance, get back their initial investment, keep the funds from the refinance, keep the funds from cash flow. But of course, they'll have to pay capital gains tax on that. So a better tax strategy is to stay invested long-term, continue to enjoy the refinance capital every 4 years or so, continue to enjoy quarterly cash flow checks and monthly updates. And of course, real estate can be the gift that keeps on giving, because we plan on possibly trading up into a bigger building through a 1031 tax deference down the road. So we have a very long-term view of real estate. And that's why a lot of people enjoy self-directing or IRA or solo 401k with us. But you don't have to stick with us long-term, but that's a great option to beat the tax man, keep more of your money, avoid capital gains tax. Because when we refinance a property and we harvest that equity growth, we pull it off the table and distribute it amongst the investors. See, we're not selling the building, and it's not cash flow, so it's not taxable income. It's debt. It's good debt. That's a low interest rate that our tenants will pay off for years to come, and we'll make sure the building's properly managed so that the debt is properly serviced. That's our job, of course. And that is the magic of real estate, that you use debt as a tool, which is paid off by the tenants over time. And as inflation grows and as values grow, and as we force value into the property by doing physical improvements and renegotiating leases, we increase the value of the property, and inflation works in our favor, because inflation makes your real estate worth more money and it makes your debt worth less. So inflation actually helps real estate owners. That's why what's going on right now with high inflation, it's not great for the market as a whole, but it's not terrible if you own a bunch of real estate. Here's an example of one of our current offerings: 2 blocks to the train station, rents 30% below market value, 27 units in Rahway, New Jersey. Huge value add opportunity. About a $300,000 renovation will do to the property to force equity into it, increase the cash flow, and allow for a cash out refinance for our investor group. All right, so let's talk about the quality of life with real estate investments, because I remember I went to a guru course about 10 years ago when I was getting started in real estate, and they said, buy real estate, sit back and collect the money. And I said, that sounds great. So I went out and I bought us myself a 5-unit near Rutgers University for $130,000. It just appraised for $650. So it was a good investment. I'm not complaining, but boy, did I learn a lot. The first thing I did was rent it out to a bunch of TRA tenants. Within 6 months, I had 4 out of 5 units in eviction court. TRA tenants mean the rent is good for 6 months, and then the government stops paying it. So I really did not do well with the building in the first year. I hired a management company that really didn't treat the building the way I wanted to. I hired another management company. I felt overpromised and underdelivered. And eventually we developed our own management company that made all the difference. But real estate is not a passive investment. Once you start owning a number of units, especially in inner city areas, it's a very hands-on investment. Even if you have a management company, you still could be responsible for answering the calls or whatever it takes, dealing with some financials of it. There's still responsibilities when dealing with a management company. So we've created a truly passive opportunity where you're not looking at hundreds of bad deals to find one. A well-vetted opportunity is brought to our investor group. And we help them really diversify out of the stock market, but have a similar experience of investing passively, without having to do anything like the stock market offers, but in a tried and true asset class, with a brick and mortar backing the investment, which is a lot more to be said than many inflated stocks these days. So we answer why everyone should diversify into real estate. We feel that about a third of your capital should be out of the stock market into brick and mortar real estate in high demand locations. I know the millionaires and billionaires have about 60 to 70% of their wealth in professionally managed real estate. And you better bet they're not running around managing it. They're investing in real estate syndicates. So value add investing is more beneficial than non-value add, right? We're not buying retail properties and sitting back and hoping they go up and collecting the rent. No, we're active investors. We're actively finding discounted properties for sale with rents way below market value. So there's value add. And that's how you create a deal. You find value add. It's not always so obvious. Your cap rate might be low. It might not look good on paper. The broker's offering might not make a whole lot of sense, but when you start digging in, you can find the value add, and that's how you find the value to these deals. So it can be easier than expected to get started in real estate. It sounds like a lot. We're buying multi-million-dollar buildings, but we make it easy to get started. People can get started with as little as $30,000 invested to a $3 or $5 or $10 million building, where normally they wouldn't be able to buy that. But by pooling capital together in a syndicate and being a passive investor, they can get into bigger buildings, and bigger buildings are better investments and safer investments in real estate. So we choose high demand locations within an hour of Manhattan. We went over some of those locations we like in North Jersey and why we like them. North Jersey has a huge amount of growth, a huge amount of companies and jobs and education, and there's a high demand of people that want to live there, that need to live there. And I know there's people that are moving south and everything like that, but North Jersey has a great amount of demand and there's not enough housing. And that's one of the reasons our values are really skyrocketing. As we were saying, people don't need a ton of experience to invest in real estate successfully if they invest with a syndicate. Not investing with a syndicate, there's a huge learning curve. Trust me, I've been there. I've flipped houses. I've sold apartment buildings. I've bought apartment buildings. I've made my mistakes. Seth and I have built up our portfolio over the years, and we've learned from our mistakes and then brought in other people's capital to build out our portfolio once we have our infrastructure in place and had those experiences behind us, so we knew how to buy and manage and reposition apartment buildings properly. We are IRA friendly. You can just use a solo 401k or an IRA to invest in real estate. So that's one way to avoid taxes and build your retirement account aggressively. And it's also beneficial for every investor to go through a short interview. So we make sure that you're qualified. There's a discovery call process. There's a qualification form you fill out online. And the SEC requires us to do this, but we also want to make sure that you're a qualified investor, that you're going to be understand the investment, you understand the length of the investment, and you're not going to need the money back, 60 days later because your car broke or something like that. So we want to make sure every investor is qualified, and that's part of my job. And of course, why passive income is not what most people say it is, right? So as I said, I went to that guru course 10 years ago, and they said, just buy real estate, sit back and collect the money. They were way off. Of course, they were trying to sell me some overpriced book or CD. But, at the end of the day, real passive investing in real estate is done through a real estate syndicate, not done by owning and managing your own buildings. Over time, you're just going to go crazy doing all that. All right, let's talk about creating a deal. I see my internet connection might not be so great right now, so hopefully you can still hear me here. Hopefully we're not disconnected, but if you have any issues hearing me, you could type in the Q&A. Hopefully everything is coming properly. But creating a deal. So step one, how do we create a deal? Well, first we find a landlord of a mismanaged building in your target market. All right, now our target market is North Jersey because it's a high demand market. We feel that prices are better than they are in Manhattan. We don't invest in Manhattan. We don't invest in the boroughs of New York City. We only invest in North Jersey. And there's even parts of North Jersey that are really too pricey now for us. So we dabble in the lesser priced areas in North Jersey for the most part. And so you first want to find a landlord of a mismanaged building that's kind of getting towards the age they're ready to sell their property in your target market. Step two, build rapport, display your value. So just like working with passive investors, we want to build rapport, we want to get to know them, understand their goals, understand what they're trying to do with the building. Maybe they're trying to sell it and move to Florida, and they just need a certain amount of capital to get there, and they need an easy closing process, and that's the most important to them. But you want to display your value so they understand that we're able to close quickly. Seth and I have closed on hundreds of properties. We have millions of dollars of funding behind us. We have banking relationships that allow us to get great loans at good rates. And these all play a role in us allowing us to negotiate great prices with landlords because they understand we're capable of closing quickly. We're experienced in real estate acquisition, and we have the resources and means behind us to buy the real estate effectively. So build your rapport, display your value. Step three, discuss the landlord's needs, and make an offering answering those needs. Right. So a lot of times, yeah, it's about price. I'm going to be honest here. 9 out of 10 times is not this simple. It doesn't work out as rosy a picture as this is. But there are times, about 10% of the time or so, we're able to really build a relationship with the landlord and buy multiple buildings from them over time. And not every building is going to work out. Not to the, they don't always give us the right price on buildings. Maybe we'll pass on some, we'll buy others. But for the most part, understand what the landlord's needs are, understand what that is. It a timeline? Is it a price? Is it a guarantee that you're going to be able to close? You'll do an as is sale. But understand, or does the landlord not want to deal with the town certificates or the green card, right? So what's the value you in that instead of the landlord? So we do all this to make sure that we get a good price on the property, that we're buying off-market deals. We also do this with agents, with real estate brokers. But to do this with real estate brokers, it's even harder and takes a little longer because they're going to be a little more suspicious of you. They also have multiple buyers, generally, any good broker. So you want to be aware of that. But we work with real estate brokers with the strategy of building rapport, displaying our value, understanding their needs, and then moving to a closing. Here's step 4, close with integrity and ask to buy more of their properties. So again, that works with real estate brokers, wholesalers, landlords. Just like raising capital, just like working with anyone, you want to work with integrity. You want to make sure that we're always doing what we say we're going to do. We're executing in the timeline we say we're going to do it in. And as problems arise, we say, hey, this problem arose, but we're solving it this way. And it's expected to take this amount of time to fix it. So be very communicative, integrity, relationships, value add, all those things work in combination to create a good deal. Where the deal is located is also important, but to create a good deal in real estate is not about so much finding the location or finding a website or finding a one person. It's about all those things working together and recognizing value add in an opportunity, right? Recognizing value add in a property. So here's a slide about value add. Value add is really the name of the game. It's so important to recognize what value add is, how it can be hidden inside an offering memorandum or hidden inside a deal that maybe other investors don't see or other buyers don't see, right? So when we're shopping for a piece of real estate for a good investment for our investor group, we're looking under the covers of the deal, right? We don't just look at a cap rate and a gross rent roll. We look at the unit count, we look at the size, we look at the location, we look at the parking, what's the repairs like? How low are the rents in comparison to fair market rent? How much renovation will it take to get the property up to where it needs to be to rent for that price? So these things are all looked into. Value add is finding things that could be improved to force the value of the property up. This generally is physical improvements to the property, such as renovations. Here you can see, roof repair, laundry facilities in the basement. Most of the capital is going into renovating specific units. Some of it's also going to lobbies and basement cleanup and landscaping. But for the most part, this renovation here, our plan is to put kitchenettes into studio apartments. We're going to create longer term tenants to that, longer term leases, and better rent as well, and attract better tenants as also. So by putting kitchenettes in the studio apartments, we make them, those studio efficiency apartments, really into real, actual studio apartments that could be leased out long term by individuals that are looking for a little bit of a nicer place, and we're going to give that to them. But our goal is generally to bring the property up to full market rent, full market value over about a 2 to 3 year period. And then we'll refinance over about a 3 to 5 year period. So generally refinance around year 4. And of course, the more income the building's making, the more the building will appraise for. Also, what helps is inflation, buying in a good location, property values going up naturally. So we have natural market appreciation, like those things I just mentioned. And then we have forced appreciation, which is found through finding value add, right? Through all the things I'm saying here, all the actual physical renovations. Another part of forced renovation is also management, right? You need to renegotiate leases. You need to lease out to top dollar. Maybe you're doing a cash for keys with tenants, and then we're leasing it up to a new tenant for top dollar. Maybe we're working with an existing tenant, fixing the issues they have in their unit and working around them, and then renegotiating a good lease for the right price. It's all really a bit of an art and a science. Improving the management of a building is half the challenge. the physical improvements are half of it as well, but they're almost more simple and straightforward. Management is a people business, right? We go in with our best foot forward, welcome package. We treat our tenants really well because we know a happy tenant equals a happy investor. And by treating your tenants well and putting, get more flies than honey, being very professional to our tenants, understanding their needs. A lot of times tenants do want to move out, and a cash for keys is just what it takes to help them have the moving costs covered. Or other times tenants, that they're willing to work with us. They understand, listen, I've had a leaky dishwasher for 3 years. Just give me a new dishwasher and, paint the living room and I'll pay fair market rent, and so tenants want to work with us. They want us to improve their unit, improve the building, and they understand that if that happens, the rent may increase. And that's a conversation that a lot of landlords don't want to have with their tenants. So they just end up not increasing rent, which is the most detrimental thing you can do to your property. Because when you increase rent, you increase your value exponentially, right? If I collect $1 more in rent, it doesn't make my property worth $1 more. It actually makes my property worth more than $1 more. And it's an exponential increase because of the way commercial real estate is valued based on a cap rate valuation. And so just by improving our rent roll and lowering our expenses, we increase the value of the real estate exponentially. And on top of that, inflation works in our favor. High demand and low inventory in the North Jersey market works in our favor. And of course, being in a good location is very key as well. So I don't want to put too little emphasis on location. That is important. But as I was saying, what's more important is that relationship with the owners or brokers, finding value add in the deal and understanding, what the clear path is to create that additional value in the deal. And if you see that value add, then it could be a great opportunity. But I got to say, it's very hard to find a good deal right now. Seth and I will look at 400 properties to bring our investors one. Okay, here's our responsibilities. All right, so we'll locate, negotiate, and perform due diligence on a real estate opportunity. We have 3 levels of due diligence: environmental, legal, title, financial. So we have multiple levels of due diligence that we do on real estate. And before we even bring it to our investors to make sure it's a good opportunity. And that due diligence continues through the closing process and the mortgage process. So then we'll obtain and guarantee a mortgage to make sure we can leverage our investors' capital. We use debt as a tool when buying real estate that allows us to make better cash flow on the property and leverage the down payment capital from our investor group. We personally guarantee that debt if we need to, so our investors don't have to. If you've ever bought a piece of real estate before, you may have had to personally guarantee debt. That's a big risk. That's something Seth and I will do to make sure we get good terms on the mortgage and take that risk off our investors' shoulders. We manage the asset in its entirety from A to Z. It's a completely passive investment. Our investors enjoy monthly updates, quarterly financials, a balance sheet, a profit and loss, and a distribution. And when the is creating positive cash flow, they enjoy positive. So we perform value add strategy through the entirety of the investment to realize targeted ROI. And then we refinance the property within the targeted time period of 3 to 5 years, generally about 4-year period we'll refinance it in. Okay, the responsibilities of the investor: they must qualify to invest as an accredited or sophisticated investor. I explained what those are in a previous slide. So we work with accredited and sophisticated investors. You don't have to be a multimillionaire to work with us, but you do have to qualify. And that process starts at peoplescapitalgroup.com by setting up your discovery call. But after you're qualified, you must review the documents. There's an offering memorandum and an operating agreement to review for what the current offering is at that time. And we'll also have a qualification process to verify your funds are available and verify different forms of income and ask you to fill out a qualification form on our website. Of course, once the investment's approved on your end, you're going to move forward to procure the funds, the title company that holds funds prior to closing. And our investors, of course, do not have to deal with the management or personally guarantee the debt. So we make it very easy to invest with People's Capital Group, but there is a process, there is a qualification bar that you have to reach as an investor. So we want to make sure you are qualified before reviewing that offering memorandum and moving to the next step. So why do PCG investors benefit? Well, there's more quality time when working with a real estate syndicate. Being a landlord, being a property manager is not a fun job. It's not a glorious job. It's a thankless job. Your tenants are never like, oh, I'm so glad you're here to collect the rent. That's not how it works. So working with an investment company like ours, like of course, any real estate syndicate allows you to avoid those headaches of being a landlord. So no experience in real estate necessary for our accredited investors, and diversification of your investment portfolio, of course. Being 100% invested in the stock market is not diversification. Even being invested with different stocks within the stock market, it still all basically works as one big machine these days. And it's very hard to be truly diversified just in the stock market. So we do think that about a third of your capital should be put into real estate. A lot of investors we work with work off that mindset of about 33 to 50% of their capital being invested in professionally managed real estate. And they've been done very well with that through the years. And as I was saying before, about 60% to 70% of millionaires and billionaires' wealth is in real estate, which is a very interesting statistic. But our investors really enjoy the expertise and the guidance. Seth and I have done hundreds of transactions, worked with dozens of investors, raised millions of dollars, bought and sold properties for years in this North Jersey market. So we understand it very well and have the infrastructure in place. And that allows people to own high demand real estate that really is not sitting on the internet. We find our deals off market, direct to landlords, direct to brokers, pocket listings. And that's how you find a good deal. It's really not sitting on the internet these days. There was a time you could find a deal on the internet. It's not today. So we have good practices in contracting and sales as well. And we, of course, have professionals that do the work for us on the bookkeeping and accounting side, the contracting side. So we have professionals every step of the way. And of course, I'm in charge of investor relations, marketing, and branding. So I'm here to answer investor questions and make sure that of course, the updates are going out in a timely manner as well. And I like to put out really in-depth updates so my investors learn from the investment while they're earning. And of course, we have the IRA or solo 401k options. You can self-direct your IRA into real estate by working with an IRA custodian. We can help you find the right IRA custodian for your goals. Just email us at info@peoplescapitalgroup.com or set up your discovery call at peoplescapitalgroup.com, and we can help you self-direct your IRA into real estate. We have a number of IRA custodians we could suggest, and then you will select out an IRA custodian. There's plenty of them out there. You self-direct your IRA from wherever it's at right now, say Fidelity. Your IRA custodian is going to contact Fidelity, say, okay, move this amount of capital over to the IRA custodian. And then your IRA custodian will move it into the investment of your choice, say with People's Capital Group, into an apartment building. And then those cash flow checks will be sent back to your IRA custodian. That lump sum upon the refinance will be sent back to your IRA custodian. It's not a way to take from your IRA and avoid tax. It's not a way to avoid the rules of the IRA, but it is a way to build your IRA faster and more aggressively and diversify some of your nest egg out of the stock market and into tried and true real estate. And a lot of people like that. They also like improving inner city areas, seeing a mismanaged building be turned into a nice place to live where people could be comfortable to raise their family and continue to live a happy life. So we really pride ourselves on making like a family-friendly environment in these buildings. And that allows people to be comfortable paying a higher rent. It attracts better quality tenants and of course, increases the rent roll overall on the property. All right, so let's go over the process to proceed and what that would be like if you felt like investing in tried and true real estate that's professionally managed in North Jersey market is a good fit for your investment goals. So the first step is to set up a discovery call at peoplescapitalgroup.com. You go to a website and click the button that says get qualified or click here to invest. And you set up a discovery call with me, Aaron Fragnito. And you're also going to be asked to fill out an application as well and to complete the qualification process, which will be completed through that discovery call. And if you're qualified, we can move on to step 3, which would be reviewing the current offering and DocuSign through DocuSign. So it's easy to review the information. It's easy to sign the information. It's easy to understand the offering. We could set up another call as well to answer all your questions after you review a specific offering memorandum, which is a document that goes over a specific property we're buying and the renovation plan and the repositioning plan for that property and the returns and so on. So step 4 is then reviewing and signing the operating agreement for the LLC that gives our investors ownership of the LLC created to buy the real estate and own the real estate. And that gives our investors legal ownership of the building. So they get K-1 tax returns at the end of the year. They also enjoy passive ownership of the real estate. So they get their piece of the cash flow, their piece of the refinance capital, their piece of the tax depreciation without having to do the day-to-day operations. Step 5, we ask our investors to then move the funds over to the title company doing the closing. The title company holds the funds prior to closing. If for whatever reason we don't close on the real estate, title's bad, something like that, then the funds are quickly returned to the investors in full. But of course, the plan is to close on the real estate, start producing positive cash flow in a timely manner, get those cash flow checks sent out to our investors quarterly, along with financials, monthly updates, and of course, a large lump sum upon the refinance around year 4. That's always our target generally for our properties. And that's the steps to get started investing with People's Capital Group. It all starts at peoplescapitalgroup.com. Like I was saying, there's an offering we put out right now. There's only a couple spots left. This is a very nice location here, 2 blocks to the train station. Very standard operation for us. Rents are 30% below market value. It's a great deal for us, right up our alley. It appraised for $3 million. We're buying it for $2.75 million. So we only have a couple spots left, but you do have to get qualified. Not everyone can invest with People's Capital Group. You do have to qualify as an accredited or sophisticated investor. And that process starts at peoplescapitalgroup.com. So go to our website, click the button to get started, schedule a call with me, Aaron Fragnito. We'll find out your investment goals. We'll talk more about your strategy to invest over the next 3, 5, 10 years. And we'll see if People's Capital Group is a fit to help you build your wealth in high demand markets without having to do the day-to-day operations. Learn from what we're doing, see how we do it, and invest to get your piece of the action in a tried and true asset class, which is high demand real estate or Jersey market. So I hope you learned something from our presentation tonight.